how important it is for them not to allow the price of silver to run. It's even more important to them than gold.
Hello and welcome. Thanks for tuning in today. The gold market has become extremely active recently, and there are multiple factors to take into account when looking at the gold market right now. There has been a lot of gold coming into the US from London and Switzerland, plus the gold at Fort Knox is going to be audited. Here to help us unpack all of this is Oren Elbaz, also known as the Silver Hermit. He is a sound money advocate and market analyst. You can find links to his social media accounts in the description below. Please keep in mind that nothing in this video is financial advice. Oren, welcome back. How are you doing?
Fine, thank you. Thanks for having me.
Absolutely. It's always great to speak with you. We have been seeing a correction in the stock market, Bitcoin, and the metals as well. If or when the stock market enters a bear market and the stocks start to drop in price, do you expect that gold and silver will rebound quickly? And do you think it's possible when they do, that's when silver will really start to enter its bull run?
Yes, so we have in the past few days we have been seeing a substantial correction in the stock market and in Bitcoin, and gold is probably getting dragged down with the rest of the market. And this could be the beginning of the recession that we've been talking about for so long. In the past few months, we've been talking about the possibility of a recession, which will drag everything down, including the metals. Judging by past instances of a recession, usually gold and silver correct together with the market, but once the Federal Reserve intervenes and starts easing again, fears of inflation reemerge. And then you see an uptick in the demand for gold and silver. You see their price starting to rebound and eventually setting new highs. This is what we've seen repeatedly. And, we can expect that to happen again. Now, there are some analysts who are arguing that this time it's going to be different and that perhaps the correction in gold and silver is going to be shallower or perhaps even non-existent. Who knows? I can't tell. I just focus on the long term. I focus on the fact that inflation is still here. As a matter of fact, it's been inching up lately, and yet if we are entering a recession, I expect the Federal Reserve to start easing. So they're going to start easing into already hot inflation. So you get the double whammy of having the Federal Reserve ease into an already inflationary environment. So you get a very hot inflation. This is what I expect to see, and perhaps this is going to launch the true bull market in silver. Finally, we've been waiting for it for so long.
Yes, we have been patiently waiting for it for a long time. And if it was brief or hardly noticeable, the correction in the metals, that would be fine with me. Um, and who knows, maybe that will be the case, and that would be great. But it sounds like worst case scenario, we'll see what we have seen previously, where they would dip and then they would rebound relatively quickly compared to stocks, for example. So at least that's something great to keep in mind.
I'm going to risk sounding conspiratorial for a bit, but I think that when the stock market is correcting, that's the opportunity for banks to hammer the price of gold and silver, and I wouldn't put it beyond them even trying to initiate a correction in the stock market only so that they have an excuse to hammer gold and silver, because I think the gold and silver issue is so important to them. It's so crucial for the for the survival of the dollar that I actually think that the powers that be are willing to sacrifice the stock market in order to save the dollar. I think it's an actual possibility.
That makes sense because you figure gold is a tier one asset and the dollar itself is considered to be a tier one asset. So they have a lot of people, central banks around the world holding dollars. And of course, they don't want it to look bad. So,
I think eventually, what the Federal Reserve is focused on is they can't help but allow the price of gold to rise. That's evident. But they wanted to rise very slowly so that it wouldn't attract too much attention. That's what they are truly fearful of gold and silver starting to attract the attention of investors and speculators and catching a bid this way. And so long as the price of gold is rising very slowly and perhaps with a few corrections, then it's fine. Then it's going to stay, unnoticed by the wide public. It's the moment that the public starts noticing what's happening, then they truly lose control over inflation and over the future of the dollar.
right, absolutely. And it is tempting for big governments to want to hoard gold because, gold lasts forever. It has no counterparty risk. When governments have gold, it means they are more independent and less reliant on others for their economic stability. So it's a real fight for the US government to keep the dollar front and center like they have been for a long time now. Because gold just makes a lot of sense. So in regards to gold, there has been a lot of gold flowing into the US from London and Switzerland. What do you think could be causing it? Is it possibly the threat of tariffs, maybe the upcoming gold audit at Fort Knox, or could this be bankers that want gold on hand in case of a revaluation, or maybe they need to cover contracts? What do you think might be going on?
Well, first of all, let's just mention that over 600 metric tons of gold have flowed to New York since November, since Trump was elected, and that's a very large number. That's the latest figure. Perhaps since then it has even increased since then. We're not sure. Now, the bulk of that amount is probably coming from the LBMA, and it's draining the liquidity in the London bullion market, which is critical because it's as though someone is willing to sacrifice the integrity of the LBMA in order to save the comics. Perhaps they think that the comics is currently more important, that it's more important that the comics continues to function and is able to deliver physical gold than to keep the integrity of the London bullion market. Now, a couple of weeks ago, like you and I were speculating that the reason that all this gold is flowing to New York is because someone rich and powerful is standing for delivery at the COMEX, and because we know that only a very powerful party, someone who has some clout,
Right.
can get the COMEX to deliver such a huge amounts of gold because usually the COMEX deals mainly with paper gold, and it delivers some gold only in order to keep the appearance that there is some legitimacy to this market. But most contracts eventually get rolled over to the next month, or get settled in cash. There's a very small percentage of the contracts being traded there at the COMEX that actually stand for delivery. And now we're seeing something different. We're seeing that there's probably someone who wants physical gold. So this is probably what is generating all this turmoil in the market. Now, a thing to note is that there's been an unusually large spread between the futures price and the spot price. Yes, I know it's kind of confusing. And I'll try to explain it very briefly. Well, the futures price is always a bit higher than the spot price because, of course, if you want gold in the future, that means that you need to pay for its storage or the storage costs and insurance costs in that time period. So the futures price is always supposed to be a little higher than the spot price, but the two are supposed to converge as we get closer to the end of the month, and the active contract is drawing to its close. So, and this is not what has been happening lately. There has been this unusually high spread between the futures contracts and the spot price, which opened an arbitrage opportunity for whoever is able to get gold in the right size, the right kind of bar, in the right place in New York. Then you're able to, as though buy spots, sell futures, and make a difference. Earn the difference between the two. Or perhaps it's the other way around. Perhaps I'm mixing it up a bit. I get confused by the futures market
Sure.
too. Yeah, I find it to be very confusing. Um, but the arbitrage is not closing, and that probably means that the active participants in this market are not able to get the physical gold in the right size at the right place. So the arbitrage remains. So that's indicative of a market which is stressed, which is tight.
Right. Yeah, and just to kind of put this into perspective, I did see a tweet earlier from King Kong 9888 that had said around 700 tons of gold had been delivered to the COMEX in the last 2.5 months. And in order to give our listeners an idea of how much gold this really is, if the COMEX was a country and all it had was the 700 tons of gold it recently received, that would put them in the 10th place globally for gold reserves. India would be ahead of them in ninth place with a reported 831 tons last summer. Now, if they had gotten 600 tons of gold, that would still put them in 11th place globally, compared to all of the major governments on the planet. So this is a serious amount of gold that has been flowing into the COMEX. Uh,
Yes, but I don't expect it to remain there. As we've said a couple of weeks ago, we speculated that the only reason they're importing so much gold is because someone is standing for delivery and they expect to deliver all that gold. So it's going to flow in and it's quickly going to flow out. And we can speculate about who is that mysterious party standing for delivery.
And just to give another example, I had read that the gold inventories at the COMEX have increased by 116% since late November. Um, January is normally thought of as a slow month for the COMEX, but they say about 19,000 contracts were delivered in January, and these contracts were worth about $5.2 billion. Now, for a major trading month, that might not seem like too big of a deal, but January usually sees about a third of that volume based on a chart I was looking at earlier. And I read that the big three COMEX vaults, where they hold the physical gold, are back up to 2020 levels. It's pretty out of character for this to be happening this time of year. And the imports from Switzerland are the highest that they've been in the last 13 years. That's according to NBC.
Yes, I have even my according to the figures I have, as of February 21st, there were 74,518 contracts. These are 100-ounce contracts. Again, I'm going to say 74,518 contracts standing for delivery. Now, that's an unusual number. This equates to 231 metric tons of gold worth $21.6 billion dollars. Now,
That is
just
crazy.
yeah, that's absolutely crazy. And to put it into perspective, that is 255% higher compared to last year, to the February contract of last year. And that's also an all-time record for deliveries. Okay, as we said, this confirms our theory that the COMEX is importing huge amounts of gold only so that they can meet these demands for delivery, so they can deliver it to someone. Now, we should, at this point, try to identify the, who is standing for delivery, who's that party with so much money and so much clout that it can get the COMEX to import all that gold, to suck all the gold from the entire world, from London, from Switzerland, from Dubai, from wherever they can get it.
Right. It's like all of it is just getting pulled over here with an amazing amount of force. And so it does seem like it has to be a really big player. I'll go ahead and mention the gold at Fort Knox is going to be audited. And this, of course, has been a big topic recently and has gotten a lot of mainstream media attention, which I do think is good for the metals. Um, Now, what I want to mention, what I think is interesting, is the gold that is held at the U.S. Mint is counted as part of the total U.S. gold reserve. So this is counted as part of the 8,133.5 tons that now, the gold at the mint is typically the gold that is lent out by the Department of the Treasury to central banks or other financial institutions as part of its monetary policy. Now, it does seem like it would be possible that if they had lent the gold out, they could be asking for it back because they might get audited before too long as well, like Fort Knox is going to be audited. Of course, they are separate from Fort Knox, but it's possible that the Trump administration could move forward with the gold backed bonds, and they might want to account for all 8,133.5 tons of gold. So they know how much gold they're playing with in order to back these bonds. It would seem to me there's a possibility that they might want to audit the other locations as well. Um, and so I do think that there could be a loose connection there. I think it's possible they might be trying to request some of this gold back that they might have lent out. And this could be putting some strain on the system in general, so to speak. Um,
Yes. Yes, well, that's a very interesting theory. As a matter of fact, that's probably the best theory I've heard so far because, there were people out there saying maybe it's the Federal Reserve trying to replenish the gold reserves which have been lent out. And I was thinking, well, the Fed wouldn't go through the COMEX. I'm sure that the Fed or the Treasury, they have better ways to get gold than to go through the COMEX because when they go to the COMEX and stand for delivery, it draws attention to the gold market. And that's the exact opposite of what they want. They want as little attention to the gold market as possible. So I was thinking it could be the Fed or
And
the
that makes sense.
Treasury. Yes, but then you asked me maybe if the Fed or the Treasury leased gold out from Fort Knox or from the U.S. gold reserves to someone else, and now they want it back. So that party is now has to scramble to get that gold back and give it back to the Treasury or the Fed. So you know what? This actually could be um, what is happening. This could be the explanation. So there is someone who leased gold um, from the U.S. government now has to give it back and is scrambling to get it from wherever they can. So they just, they're standing for delivery at the COMEX, and since they are so powerful, the COMEX has to acknowledge their requests and fulfill it somehow. And
Right? They're
I
forced to play ball. They
yes,
they got
but
to
but
do
who
it.
is that party? Who has done it? Could it be a bank? I don't know. Look, my hunch is that the big banks wouldn't go through the COMEX. They don't need that process. If they want to import gold, they can just import gold. If they lease gold, they can do it. They can return it directly. They don't have to stand for delivery at the COMEX. I don't know, some big corporation or I don't know, someone rich, perhaps some billionaire is behind that. I don't know. And now there's another theory, another theory that I'm floating that
Uh-huh.
perhaps it's Elon Musk. No, I don't think that Elon Musk has ever borrowed gold from the treasury. I'm not blaming him of that, but perhaps he has a hunch that inflation is getting worse and that the price of gold is going to rise substantially. I can't help but asking, perhaps it's Elon Musk buying all that gold.
Yeah, hey, you never know. He is in the United States and he does have deep pockets,
Yeah,
and it wouldn't be a
like
bad move.
I, I don't recall his exact personal fortune, but I think it far exceeds $21 billion. So if he wanted to convert half his fortune to gold, why not do it this way?
And that would definitely disrupt the system and put a lot of pressure on it if he did start buying a lot.
Yeah, well, it would be smarter of him not to do it all at once. It would be smarter to accumulate it gradually
Definitely.
over time so that it won't attract attention. But let's suppose for a second that after Trump got elected, and as we all know, Elon Musk was heavily invested in Trump's campaign, personally and probably also financially. Um, then he suddenly realized that gold is going to have its day in the sun, that inflation is not going away, that he needs to protect himself against inflation. So perhaps, started scrambling to get some gold. It's possible.
Yeah, you never know. I mean, it is possible. And when you're looking for a really big player, there's not a long list.
No, it's a
And
very short
Elon
list.
Musk would be on it.
Yeah, as the richest man in the world, he certainly has the money to do it. But of course, there are other billionaires who could be involved, and perhaps it's not one billionaire, perhaps it's a bunch of them.
I like the theory, and it's definitely something to consider.
And the thing to note that person or corporation wants physical gold for once. Because I think even a few years ago, if someone really wanted to have a huge exposure position on gold, they would just buy the futures and
I
they
agree.
wouldn't stand for delivery.
And then they wouldn't have to worry about messing with storage or security or anything like
Yes.
that. Yeah,
They wouldn't have to pay for storage. They wouldn't have to pay for the insurance,
right.
all those expenses. It's someone who realizes how scarce physical gold really is, realizes that this entire mechanism of the futures market, it's on its last legs, and wants the physical metal for once.
Right. They want it out of that ecosystem. It's very interesting. Let me ask you about Fort Knox. This was my basic thoughts on the situation at Fort Knox. I feel like the administration must feel strongly that all of the gold is there, or at least the vast majority of it is, because it seems to me like it would be too risky to be doing this public of an audit if they didn't know that. I just feel like it would be really damaging to the US dollar if it turned out, imagine if there was no gold there at all. Um,
Yes.
I mean that would just be a crippling blow to the US dollar's dominance. Um, so what do you think about the situation at Fort Knox? Do you think the gold's going to be there? Do you think it's not going to be there? Or what are your thoughts on that?
Yeah. Well, first of all, let's mention the numbers. There are supposedly 8,133 metric tons of gold in the US gold reserves. Now, they are divided among a few locations. Of course, Fort Knox is the most famous one, but it only holds officially 4,583 tons of gold, and the rest is divided between West Point with 1,679 tons, and there's also some gold in Denver, 1,363 tons, and the rest is in New York, perhaps a couple more places, the US Mint. But these three locations are where the bulk of the gold is held. Now, if they really want to do a proper audit of the gold reserves, then they need to examine all three places at once. Because you never know if someone is going to try, you count the gold in Fort Knox and then you move to West Point and they start moving, they start
Exactly.
sending trucks with gold from Fort Knox to West Point so you can count the rest there and you're going to be double counting the same gold. So you really have to, you really have to be careful and you really have to conduct an audit in all three places at once. And also, we've had all sorts of publicity stunts in the past. For instance, Secretary Mnuchin, during the first Trump administration, he had this trip to Fort Knox. He stepped in, he had a look around, he stepped out, and he declared to the camera, gold is safe. The gold reserves are safe. But that's not a proper audit.
Not at all.
Just having a look at a few bars, like how do you know these are not bricks of tungsten painted gold?
Right.
You
Absolutely.
need to examine the bars, at least pick up, random bars and have them examined, see what's the metal content of these bars. And also another thing is that you need to go through the books and you need to see that who owns that gold, because if that gold is leased to someone else and if it doesn't belong to the US government, or it's just being
Right.
stored there but officially it belongs to someone else, then it's
Then
no
that doesn't
good.
count. Yeah,
Yeah,
you
it
can't
doesn't
back a
count.
treasury with that.
Definitely. So the audit needs to be done, properly for once, because I don't know. I think the last time Fort Knox was properly audited was sometimes during the 50s. Now think about it. That's so many years, and that's so much gold. And now you are asking me about. You are saying that Donald Trump must be quite confident that the gold is there. Otherwise, he wouldn't call for an audit. But the thing is that nowadays we're seeing the government is it's so divided. It's not united. There are all sorts of factions within the government fighting each other, and perhaps. Perhaps Trump is rather confident that the gold is there, and he doesn't know the real truth. And that's the reason that he needs to go there himself and see with his own eyes, because he can't even believe those government officials who are reporting to him. Now, even if everything is there, you need to do it in order to foster confidence, especially if you have any intention to, for instance, revalue the gold or issue gold-backed treasuries, as we've discussed last time. Um, of course, you need to demonstrate that the gold is really there and to end all those rumors and all those doubts regarding the U.S. gold reserves and create confidence among the public that it's being managed properly.
Right, absolutely. Because there is quite a bit of the population that thinks it's empty. I've seen a lot of people post that online. And some of these people have pretty big voices.
Look, I don't know if the gold is there or not, but if it isn't, then the culprit, the most likely culprit, in my view, is someone who's already long dead. I'm talking about LBJ. There was an extended period of time during the 60s when inflation started to creep in, and foreign nations could still get their gold out of Fort Knox, and there was a run on the gold there, and the U.S. Gold reserves they absolutely plummeted during that period. Now, if you ask me, uh, when was Fort Knox ransacked? Probably, if it was ransacked, then it probably happened during that period. And I'll give you an example from your personal finances. Let's suppose that you lose your job and you have no income and you have all those bills and you have all those expenses. What are you going to do first? Before you even take on debt, you would you would use your savings. You would deplete your savings. That's the first thing you would do.
Right, of course.
So since we know the US and the dollar was under stress beginning in the 60s and of course ending in the 70s, it's likely that the US used its gold reserves in order to try to shore up the dollar at the time. We know that eventually what saved the dollar, a few factors. Well, first of all, it was the agreement with Saudi Arabia to sell oil for dollars only, which created the petrodollar, and also around now 1980 when Paul Volcker jacked up interest rates to such an extent that it was again profitable to hold U.S. treasuries, and that's what ended inflation back then. But perhaps in order to stop the inflation back then, perhaps they had to use all that gold that they had in order to satisfy the market's demand for gold. And now that we are again battling inflation, then our savings are depleted. Now, now we're in real trouble because we don't have those reserves, those savings in order to save us. I don't know. And we won't know until we open the vaults and see what's in there.
That would be a nightmare. But yeah, we don't know for sure until they actually do it.
Regarding this topic of gold revaluation, many people are talking about it right now, and that's one thing that I want to make clear. Revaluing the gold to its current market price, as far as I'm concerned, it does nothing. It does nothing to shore up the finances of the federal government. Because, okay, theoretically, they can borrow against the value of the revalued gold. That would give them about what, $800 billion dollars?
Something like that,
That's
yeah.
less that's less than $1 trillion. That's they can theoretically reduce the deficit. It's just an accounting trick. It still means that more dollars are flowing into the economy. It's not going to stop inflation, but at least officially, the deficit will be reduced by a little less than $1 trillion. But it's only going to happen once. You can only do that trick once, right? So if you really want for that revaluation to help the finances of the federal government, you need to revalue the gold to a much higher price than the current market price. I mean, like if you revalue it not to $3,000 an ounce, but to $30,000 an ounce, for instance, then you get instead of $800 billion dollars, you get 8 trillion. Okay, now you're talking some serious money. And if you revaluate it to, let's say, $300,000, then you get $80 trillion suddenly. So with $80 trillion, you can cover the entire national debt and have some left over in order to start funding all those unfunded liabilities.
Well, in regards to the idea of charging wealthy foreigners $5 million dollars for a visa in order to get into the US, and if they are going to sell 10 million of them, and this was an X post I had seen earlier, and then I just double checked the math. Um, that would be equal to $50 trillion dollars in revenue. And something they hadn't mentioned, but that it made me think of, is that that would be enough to pay off the national debt. And then, they'd be left with another, what are we at? 36.5, another 13.5 trillion dollars in surplus. And so maybe that is a way that they could get rid of the national debt. And then if they just mark the gold to the market price, they wouldn't have to worry about muddying up the waters, especially if they wanted to onboard some more gold, they wouldn't have to worry about like the price getting out of hand, any damage to the US dollar. But yeah, I don't know. I'm not sure what exactly they would do. I do know a lot of analysts have come to the conclusion they would market to market, but they might do it higher. I just don't know. What do you think about his idea to sell visas for $5 million dollars to wealthy people?
Well, first of all, it's a nice idea. Well, Trump, the businessman, of course, that's the first thing that comes to mind. Perhaps we can, raise some money, but by selling U.S. citizenship. But I'm not sure that people who do have $5 million to spend on such a thing, if they're not already, well established where they already are, because, the wealthy people of the world, usually in each and every country, even the least prosperous countries, the wealthy people among them, they're usually the elites, and they're in a good position. They're
They're
they're they're
comfortable,
making, yeah, they're comfortable where they are. It's
right?
the people who really want to come to America in order to improve their situation. These are the poor people. These are the people who don't have opportunities where they live, and they believe that they can have better opportunities in the United States. Now that's a good thing. Attracting immigrants, especially the talented people, the people who have initiative, the people who really have the wherewithal to improve their situation. That's generally that's a good thing. The problem is with welfare. If somebody arrives here, with just the clothes on his back, just the shirt on his back, and immediately gets all sorts of, even before he gets a job, immediately gets all sorts of benefits, such as free healthcare, free housing, pocket money, as we've seen in the past few years, that attracts the wrong kind of people. That attracts the
Absolutely.
grifters.
And the Biden administration was terrible about that. They were paying out insane benefits to these people. But yeah, if we could at a minimum be attracting people that are going to come here, engage in the workforce, add to the economy, not be a drain on the economy. I mean, that would be huge.
You need either to say, okay, either you reduce welfare substantially, and you tell everyone just get a job, and we're going to reduce your taxes, but also we're not going to give you any welfare. Then the new immigrants are only people who are coming in order to work. Either this, or you make it a condition. If you're coming here and you receive welfare, in order to receive welfare, you need to have a job, or you need to, show that you've made the effort to speak the language, and
Assimilate to some
you're not,
degree.
yeah, you're an honest person. You don't have any, a police record. You haven't committed any felonies. At least demand the very basic things before you invite the entire world to come over and to enjoy welfare benefits on the expense of the American taxpayer.
Yeah, absolutely. So with everything going on with the economy right now, with the metals markets, um, I just wanted to say, I think if you do need to sell something right now for some extra cash, I've heard of people selling their silver. I think it's a terrible time to sell your silver if you got just anything, furniture you don't use often, you name it, old tools that you'll never use again. Find those items around your house to sell. That's what I would encourage people to do. What do you think? Do you think right now is a bad time for folks to sell their silver?
Yes, I agree with you. The last thing I would sell right now is silver. Silver hasn't had that huge run up that we would expect, given that gold is setting new all-time highs. I would expect to see silver surpassing $50 long ago. It just demonstrates what kind of a grip the big banks have over silver, and how important it is for them not to allow the price of silver to run. And it's even more important to them than gold, obviously. But as they're losing control over the gold market, we should expect them to lose control over the silver market as well. And I know it doesn't look this way right now because the price is kind of lingering. The gold to silver ratio is above 90. It's absolutely depressing to hold silver. In retrospect, if you check out what was the price of silver a year ago, it was around, I think, $22 an ounce. So it has gone up substantially, but if you compare it to other things, certainly if you compare it to all those meme coins who has, their value has multiplied many times over, then silver, of course, looks lackluster right now. It looks kind of, you know, it doesn't look very enticing, but this is exactly when you should be most bullish when nobody's looking at that commodity and when the fundamentals are so great and when you just know that once the Fed starts easing again, once the Fed cuts rates back to zero, once they start printing dollars again, you're almost guaranteed that it's going to take off together with gold. It's probably the next time it has this, it jumps, the next time the price of gold starts running, it's probably going to rise to $50 an ounce. Perhaps it's going to have a bit of a consolidation there, but eventually it's going to go through that $50 an ounce, and eventually it's going to set new all-time highs. And we all know the fundamentals are just so good, so positive for silver. I wouldn't let go of my silver right now.
Absolutely. And you know what I would also just like to mention to the listeners is over the last 20 years, we've seen the gold to silver ratio break under 50 multiple times. It happened back in like the 2006, 2007 era a couple times. And in 2011, it broke all the way under 40. So as recently as 2011, we had a gold to silver ratio in the mid 30s. And so that's something people can keep an eye on too. Because, I'm not necessarily recommending hang on to your silver forever, but um, there's no way I would sell mine right now. I'm going to be looking for a much better gold to silver ratio because I really want to get as much out of it as I can when I do sell it. And I just encourage people to think about that.
Yeah, I want to remind folks that currently it is coming out of the ground with a ratio of 1 to 7 compared to gold. Because the price has been so low for so long that there hasn't been much of an incentive to mine silver, especially as a primary metal. So it's coming out of the ground at a very low ratio, and although it is reasonable to assume that there's a lot of above ground silver floating around there, still, a lot of it is getting used. A lot of it ends up at the bottom of a landfill. So when the day comes and the price starts running, I think we're going to see some kind of a silver mania, along with the gold mania. What we've seen thus far in the precious metals market, it's just the very, very beginning of what we should see, what is waiting ahead. Uh, in all likelihood, there's another wave of inflation coming, and just hold tight to your physical metals. I think people are going to get rewarded for their patience.
Absolutely. And I think you're right. I think what we've seen at this point is just the tip of the iceberg. Um, Silver has been in a deficit for years now. There's a huge amount of industrial demand, as Oren had mentioned. So, yeah, please, if you can, hang on to it. I would like to thank everyone for watching tonight. Really appreciate it. Please check out the Silver Hermits links. I'll leave in the description. Um, Oren, thank you so much for being here tonight. It's always a pleasure to talk with you.
Thanks for having me. Thanks. It's always a pleasure. It's always a pleasure talking to you.